Does the RV industry offer 10x opportunities? That is going to be the topic of today's video. Hi, my name is Hamish Hodder and welcome to the video. Today we're going to start off by talking about the industry itself. So what is the industry like? Its competition? How do the businesses within that industry operate? Which ones are dominating and which ones are not? And then of course, I'm going to explain to you how the RV industry can offer you a 10x opportunity to 10 times your money over the next 10 years. And I'm going to use an example to show you that. So if you enjoy the video, make sure you leave a like and let me know your thoughts down in the comment section below. But for now, guys, let's jump into it. So let's start by looking at the industry trends because we need to understand how this industry is moving over time. If you're going to invest into an industry that is shrinking over time, then the amount of revenue that's available for the businesses that you're going to invest in, because you're not buying the whole industry, you're buying a business within that industry. If the industry is shrinking, then the available revenue for that business to capitalize on and to take market share from away from other businesses, that is also shrinking, and that is not viable over the long term. If you have an industry that is stable, then a business within that industry, if it wants to make more money, then it needs to take market share and customers from other businesses because there's a set amount of revenue and it needs to take revenue from other businesses in that industry. That again is not ideal. The best position to be in is an industry that is growing, because that means that just by maintaining their customers and then acquiring the new customers that are joining the market, because if the amount of revenue is increasing in the market, it means that there's new customers coming into that market and spending money. And that means that a company can just maintain their market share. They don't have to take market share from other competition. They just maintain their market share and their revenue will increase. And of course, if they can increase their market share, take away from other competitors in the market and maintain their market share, then they will increase their revenue rapidly. So that's the ideal scenario. And that's the scenario for the RV industry and businesses within that industry. So in 2017, the RV industry shipped about 504.6 million RVs. So that is how big the market is at the current time. And of course, as I just said, if that was stable, then it's probably not the best thing. And if it's shrinking, that's certainly a bad industry to invest in. So we need to determine how rapidly is this changing and is it increasing? And for the RV industry, it is increasing. And if we look over the past 12 years, they've been able to grow, or the market has grown the amount of units sold by 12% per year, and that's a CAGR, a compounded annual growth rate. So that's really, really impressive that the number of RVs sold by the entire industry and by businesses within that industry has grown at double digits over the past 5 years. Now, that's really impressive. However, the RV industry is cyclical. So that means that is not always going to be the case. If economic conditions are poor because we're in an economic downturn or a recession, or there's some kind of headwinds within the industry, then the businesses are going to perform poorly. So if we look at another 5-year period, so we just looked at 2012 to 2017. If we look at, say, 2006 to 2011, which was during the GFC, then the units went down by over 8% per year compounded. So you can see that if we just look at a 5-year period, it really doesn't tell us too much about the long-term performance of the industry, which is what we care about as a long-term investor. So if we want to see the full picture of the RV industry, we need to look over multiple cycles. And we can look at the last 34 years of data provided by the RVIA, and that tells us that the compounded annual growth rate for the industry over multiple cycles is about 4.3%, which is still a good rate of growth for an industry like RVs. Now you're probably thinking, how the hell can you make 10 times your money over 10 years in an industry that's just growing at about 4%? And we'll get to that. I promise you, I'll show you an example of where you could have made 10x in the past. But first, let's have a look at the competition to understand what are the businesses within the RV industry. So the RV industry has about 60 manufacturers in it. However, there are only 2 major competitors, Thor Industries and Forest River. Now, Thor Industries is a publicly traded company on the New York Stock Exchange, whereas Forest River is a subsidiary of Berkshire Hathaway. So Forest River is owned by Warren Buffett's company, Berkshire Hathaway, and both of these companies take up over 80% market share in the RV industry. Thor Industries has market share of about 48%, and Forest River has market share of about 33%. So both of those combined take up about 82% of the market, which is really, really impressive. And then there are a lot of smaller competitors in the market. A couple of the other major ones that you might have heard of are Grand Designs, which have 5.1% market share, and we have Winnebago with 3.1% market share. And from there, the market share just gets smaller and smaller and smaller, and the vast majority of RV manufacturers in this industry have less than 1% market share. So it really is dominated by those two major players. So that brings us to the major question of this video, which is can, and if so, how can we make 10x in this industry? And to do this, I'm going to use an example, and I'm going to use the company Thor Industries, which is, as we said just then, the biggest player in the market. It has almost 50% market share in the RV industry. Now, the first thing to say here is that you can definitely make 10x in this market. And the reason for that is because it's highly cyclical, which means when there's poor economic conditions, when there's a market downturn, when there's a recession, people lose their jobs. And as a result, people have a lot less money on average. And as a result, on average, people spend a lot less money on discretionary items like RVs. They don't buy their holidays, they don't buy new cars, they wait and they save their money because they need it more because of the poor economic conditions. And as a result of people spending a lot less, companies in the RV industry have 2 or 3 years of really bad performance. Their revenues drop and their profits drop, and as a result, investors from Wall Street and institutional investors investing on behalf of a fund of money, they sell all of their stocks in these companies because they can't hold them if they're not going to be highly profitable for the next 2 or 3 years. Now, we can use Thor Industries as an example, and during the GFC, its stock price dropped 80%. And in recessions prior to this, it's dropped between 20 and 40%. And that is completely to be expected. In fact, their cash flow dropped 80% during that recession. So it was completely justified that if we're just looking in the short term, if we just have a short-term perspective, that the stock price dropped that far because the cash flows that that company could produce also dropped that far. But it also led to quite an exciting opportunity. So right at the bottom, Thor's stock price was $11 per share. And at this time, the equity within the company was about $12 per share. So that means that if you could have bought the entire company for $11 per share, you could have sold all the assets, used some of the cash to pay off the debts, and you would have made a $1 per share profit instantly, an instant profit. You were paying less than the assets on their books. And this is a company that in the 10 years prior to that drop in stock price, where it was below assets minus liabilities, where it was below equity, in the 10 years leading up to that, they had grown their cash flows at 20% per year. So this is a company that has amazing growth. It has a massive track record of continuously growing equity, cash, revenue, and earnings, yet it still dropped 80% because of those short-term headwinds and was priced at just $11 per share. Now, the stock price peaked about a year ago at the start of 2018 at around $155 per share. So that means that if you wanted to make 10x on this stock over the past 10 years, then you would have needed an average price of around $15 to $16 per share. And Thor's price was below $15 per share for about 6 months during the GFC, which gives you plenty of time, as long as you had the cash, to invest into this stock, either by making an initial position when it dropped below $15 per share or around that price, or to be averaging down your price for the entire year in which Thor's stock was falling. And maybe you won't get it below $15 per share, maybe you'll get it to 20, but even if you got it to say around 30, you still would have made 5x on the stock, which is over 15% per year for 10 years, which is outperforming the market. Now, of course, Thor Industries stock might not be as attractive as it was in the GFC because that was quite a unique circumstance, but it may or may not, and that's not really the point. The point is that you need a list of these great businesses because when there is an economic downturn, some of those businesses, maybe it won't be Thor Industries specifically, but some of the businesses on your list will come into these situations. And it's in those situations that you need to capitalize and invest a lot of money when it's clearly obvious that you will make a significant return. So I hope you guys enjoyed this video, and if you did, make sure you leave a like and let me know your thoughts on the RV industry down in the comment section below. Of course, if you're new around here and you want to see more, hit that subscribe button and hit that notification bell so you don't miss out on any of the future videos. But I hope you guys have a great day, and I'll see you in the next one.